Good afternoon and welcome to this third of a three-part series of webinars about the launch and the implementation of the Omni CBR and the consultation process. That is the first part of this launch process. In this webinar, we are going to be talking about the Omni CBR's additional sheets. So in the very first webinar that we had, we were talking about the reason for the Omni CBR, the background to the development of the Omni CBR, and the timelines as well as the consultation process. And we'll remind you of the consultation process just now. In the second webinar, we looked at the sheets that everyone has to complete regardless of who they are and what license they have. If you have a license with us, you have to complete the all sheets. In the third webinar, we are going to be looking at the additional sheets that you would only complete if you perform certain functions in your business. So the sheets that we are discussing this time does not apply to everyone, but we are going to be looking at every single one of those sheets because they will apply to some of you. I am Charene Nortier and I am from the Conduct of Business Supervision Division, and I am joined by a very capable group of colleagues who were all instrumental in the development of the Omni CBR. They all have particular interests and you will see where they fit in as they discuss various of the sheets. So in no particular order, I'm going to introduce Marrelie Victor. Hello, Marrelie. Ryan Neale. Juanita Smit, Andy Rapasha, Vanasa Padayachee, Solani Baloyi, Brent Jones, Lehlogonolo Chuenyane, and I'm sorry for the mispronunciation, and Louisa Basitere, Mkumla. Thank you very much for joining me for this afternoon session. Juanita, can we start with taking a look just at where people will look at the Omni CBR for the first time? This is the page that you are showing us right now. Could you just quickly remind people what they need to do on this sheet before we start delving into the additional sheets, please?
Sure, Charene, you put me on the spot there. Didn't know we're going to go from the start again. But hello, everyone. Yes, so as we said in the first webinar and the second webinar, you'll need to, the Omni CBR that you will be receiving is the full Excel sheet. And that's not the form that it will be in when you actually have to submit it. It's just the form that it will be in for comments. And it will be able to customize. It does have a customization functionality so that you can customize it for your entity and only complete the information and comment on the information for your entity in your specific industry. So this is always the beginning, the start page where you have to fill in the information about your entity itself. We do want comments also on the information that we're asking, but please remember, we're asking the information because we also need to update our systems on a regular basis. And we want our information to be up to date. And this is also one of the things that we've seen is most non-compliant in the different industries is that when there's changes, everything is not completed. Then again, you have the instruction sheet with basic instructions that will help you and guide you through the completion. There's the terminology sheet, which we said is in, I think it was in the second webinar. Basically, on the terminology sheet, it is terms that we believe is not in any of the legislation. So it's not definitions that you have in any current legislation, or it is where it is in different sector legislation, in the different sectors legislation, and has little nuances and how it changes. Then here we gave one description for it. The terminology sheet is important because it will assist you in understanding what it is that we're asking in that question and what it is that we mean with certain words. Then you'll come to the company information sheet where you'll fill in a lot of your own business details and you'll tell us what type of customers you have, number of portfolios. This is important because when you customize the sheet, you will only see the sheets that are either applicable to retail or to business or to both of them, depending on who you chose was your customers. And in the CIS and hedge fund world, you're going to need to have a sheet for each portfolio. So that is why the number of portfolios is important here, because that is how many sheets will be generated for you when you customize. You'll also then fill in your activity information. So if you chose to be a, let's say, insurer, for instance, all the insurer details will come up and you'll have to fill in yes or no next to it. Like we said, the level 1 is showing whether what type of entity you are, if you're an insurer, non-life or life, if you're a bank, traditional, foreign owned, or a mutual bank. That is the type of information that you'll have in level 1. Level 2 will be your type of underwriting that you do. And in level 3, and this is basically all that this table is for, is to indicate what type of activities you're busy with. The activities that we mention here are the ones that are aligned to the COFI bill. Currently, it's not final, as you know, it's just a bill. By the time the Omni CBR becomes final in 2026, like we indicated in the first webinar, these activities might have changed to align to the COFI bill, and for now, it's just for getting information. It's also to get entities used to the terminology that we use for the activities in the COFI bill, and to start thinking about what you're doing and what you're not doing. Then we have the different product sheets that we already indicated in the second webinar that you'll need to complete for certain sectors. And that influences the columns that you have on those sheets. And then after customizing all of this, you'll have all the all sheets that are applicable to you, and then the specific business composition additional sheets that applies to your sector, which you then indicated. And those are the sheets that we'll be discussing, like Charene indicated in this webinar. It is because of risks that were identified for your specific sector, and because there's information that we want to drill down on for your specific sector. Thank you, Charene.
Thank you very much, Juanita. And if we can start then with the sheet that you are showing right now, which is the one for FSPs who specifically are authorized for category 1 and 4. The additional sheet that you will need to complete has quite a number of questions on it, and I'm going to pick on some of this. As you can see at the top, as well as Juanita is showing us right now, we are going to ask you to indicate what is your main kind of business that you are doing. So are you a motor dealer? Are you a retailer, a credit provider, etc. And this also helps us with understanding the trends and the patterns in particular areas of the industry. Because the category 1 space is so particularly wide, we don't always have the ability to categorize the information, and understanding what your main area of business is, in addition to having a license from the FSCA, will help us with our trend and risk analysis. So one of the first questions that we ask is about the ownership of the entity. And the reason why we want to understand this is that it is aligned to the financial inclusion strategy of the FSCA. And I'm not sure whether you are aware of the fact, but the strategy of the FSCA has recently been published on our website, and you are welcome to go and take a look at that. So you will also see an alignment between some of our questions, such as the question on ownership, to the strategy. The second thing that I want to highlight to you is that we have quite specific questions about the distribution channels that FSPs follow and that you use. And this is also similar to the questions about distribution channels that you will see on some of the other sheets. This again will allow us to identify risks, it will allow us to do trend analysis, and it will give us an idea about the popularity of certain channels rather than other channels. That again shows us as the regulator where we have to focus our regulatory and our supervisory attention. So it will both be useful for you as the industry to understand what is your own specific distribution channel changes over the last few years. Over the last 2.5 years, we've certainly seen some changes towards the more virtual distribution channels. And it will be interesting to see how this evolves going forward. The other thing that we ask questions about, that we also will get questions from you, is why do we as a regulator want to know about the non-financial services and products that you offer? Again, this helps us to understand where FSPs fit into the broader industry in South Africa. What is your main focus area? And then if we understand that, we can look at things like growth, we can look at things like diminishing use of certain channels, and we can look at trends, risks, and patterns again. So that helps us from a supervisory perspective to focus our risk attention. If we carry on, then we also have some questions about third-party agreements. Now, we know that not all FSPs perform all of the financial services and products with their own staff, that they enter into third-party agreements where there is an extension of their reach and their ability to contact clients and provide services to clients. But we don't always understand the extent to which this is used. So how much of this is being done by the FSP themselves, using their own resources, and how much of this is outsourced to a third party? So again, this will help us to do trend analysis, risk analysis, and also have proportionality in our approach to the supervision of authorized entities. And as you can see at the bottom of the page, there are going to be some opportunities for you when you give us a specific response to then expand on that response in the comment section at the bottom of the page. So that, I think, are some of the highlights for the category 1 and 4 FSPs. If we then move to the non-life insurer page, I'm going to ask Juanita to help us with understanding some of the questions on that page. So Juanita, thank you. Can you please provide us with a general description of the business composition additional sheets for the personal and the commercial business specifically, and then elaborate on the reasons for asking the questions that we do ask on these sheets?
Okay, thank you, Charene. Yes, so I think the insurers will realize that most of the questions that you have on this business composition additional sheets are the ones that you have currently in the current insurance CBR on the policy level sheets. So we do need to drill down a little bit more and understand your clauses of business, the size and the value of your clauses of business. How do you collect your premiums on it? How many times do you launch new products? What is your premium cycles? Those are a little bit additional questions that we're asking that we didn't ask before regarding your products and your premium cycles. But we also then, as said in the second webinar, prescribe to you your target market and the breakdown for your target market. But here we have the business composition part, as you would have on your policy level sheet, as you have now. And then, of course, we also drill down a little bit more into the third-party agreements, which is basically the same questions that you have now in your current insurance CBR, but we also ask the question about your binder agreements and the ownership thereof, to also see how that aligns to your own transformation plan.
Thank you, Juanita. That's very useful. Why do we distinguish between the premium cycles?
So, Charene, we actually realized with all our engagements with the insurers over the years that it's important to actually do this, because you do pick up, it's difficult to do an analysis and to do trends and to even pull reports on premiums if you don't know in which cycle they fall. We make assumptions that certain types of products have certain types of premium cycles, but with this, breaking down this question to this level, we'll have accurate information. It also informs us a bit about the money laundering risk that you might have, the terrorist financing risk. There was a big exercise done now by the industry, and we took part in it, the PA took part in it, and the FIC, to try and see which products are actually more known to risk and is more vulnerable, if I can put it that way. And if we had this type of data and we were tracking this type of data before, we would have had that answer already. This is also important for any future regulatory changes that we might want to bring, because what we've seen is products change, the needs for products change, and we're seeing a lot of upcoming insurers that are really going with this pay-as-you-go type of insurance and premiums. So we also need to see if there's changes in the premium cycles, and if there's a need for a change, maybe in terms of legislation, and we can be a little bit more preemptive in that way. For instance, like grace periods, and know how to apply any possible changes there. So this is really also to just get more accurate trend analysis, but also to prepare us to be a little bit more preemptive.
Thanks, Juanita. Then the next thing that I see you've got on this sheet are questions around whether a product is new or enhanced. Why is that an important question?
So what we've seen is with our engagements with the insurers, we ask them to tell us about their products, to tell us if a new product is coming, whether they're doing any enhancements to the product. So there's no reporting requirement for traditional insurers to report this to us, but it was a standing agenda point with the engagements over the last 3 years. And what we've seen is it's a very good indicator to see whether the insurer is actually complying with the premium review requirements that we have in the PPRs. It's a good indicator to see that before you launch or enhance the product, that you actually did proper market research, because if you have to relaunch the whole time or invent new products the whole time or withdraw products from the market, it is also an indication of whether you actually know your target market, whether you understand your industry, whether you understand your policy holders, whether you're very innovative, maybe, and moving forward much faster than the rest of the market. And then we would like to know what type of products that are so that we can move with you. I mean, that's always been one of the things I say about the authority, is we're always at the back end. The industry is always moving faster than what we are, and that's because we don't do the innovation of new products. And this is what we'll see here is really how well you know your target market.
That really makes sense. Thank you. Why do you have questions about terminations and lapses?
Terminations and lapses are very good market conduct indicators. Again, and we've said it in I think the first and the second webinar, the Omni CBR is not going to be our only tool that we use for supervision. It is a very strong tool that we're going to use, and it's very important because it is a cross-sectoral tool, and we'll use it for off-site monitoring. But when it comes to the lapses and the cancellations, we've made some assumptions that, you know, depending on when the lapse occurs, that would show different indicators such as mis-selling, hard selling, that there was maybe some forceful selling going on, or about the affordability of your policyholder for the product that you're offering them. So if there's lapses, especially in the first year, we can accept that there might have been some mis-selling. Again, you can't just use one indicator. It's just a flag that will go up, especially if there's a trend that we can see with that. And the same with cancellations. If you have a lot of cancellations that are in the first year or within the 30-day cooling off period, that to you as an entity should be a flag that goes up as to what went wrong with the selling of this product to the policyholder. And you should then investigate also the channel in which those lapses or those cancellations are happening. And what's interesting is, and this is why I always say this, and I'll say it every time that anyone asks me, this Omni CBR, the same as the Insurance CBR at this stage, is really a tool that the business can use to see their own flags, enhance their own bottom line, see where the gaps are in their own supervision and their own monitoring, see where the gaps are in with compliance with legislation, and also whether your products are performing the way that you want and your distribution channels are performing the way that you want, and start measuring them, because that's strong indicators about how your customers are feeling, whether it's appropriate or not.
Thanks, Juanita. The last question on this sheet is about the third-party agreements. Can you give us a little bit of an overview of why these questions are asked and what are being asked?
Okay, Charene, like I said at the beginning of this sheet, this is not new to any of the insurers. This is really about your binder agreements, your outsourcing agreements, your cell captives, the agreements that you have there. It's basically the same questions that you're answering now. The only enhancement that we did on this part of it is about asking about the Black-owned ownership when it comes to your binder agreements and whether you're starting to consider that and incorporate that to be aligned to your own transformation plan. So that is basically the only new thing we're asking here. As with our engagements with insurers, we have explained that we need to drill down not to only know the number of agreements that you have, because that's exposure to third parties, and that gives us an indication to your risk rating. It gives us an indication to what type of monitoring you need to have. It also tells us about your vulnerability that you have towards other parties, and whether that is also very concentrated or not, and how dependable you are on them, to really see that you as the insurer actually keep the pen in your hand even when you give it away, to say it in that way, that you really still have control over your own business.
Thanks, Juanita. That was very clear. I'm going to move to the live questions now. And Vanessa, if you can help us with this. So I know that the insurance companies have been completing a CBR. So a lot of this would hopefully be quite familiar to them. But there are enhancements. Could you talk to us about the enhancements, please?
Yes, sure, Charene. So the business composition section is basically the questions that are currently being asked on policy level to the insurers. We have a sheet for individuals, which indicates the manner in which the policies are underwritten on an individual or individually underwritten on a group basis. These are the policies that insurers are currently reporting on. With the Omni CBR, we now are also asking about group business on a separate sheet where we indicate which questions are on a policyholder or policy level and which questions are on a member level. We're testing compliance with the requirements that we have regarding data and the direct influence that data has on how claims and complaints are dealt with at member level. Now, we've seen abuse in this space, for example, where you have a situation of an employer and a member and an insurer, and the member benefits are not directly communicated to the member, they are communicated to the employer. The insurer takes it for granted that the employer will communicate that information to the member. Member hears nothing and then submits a claim, and then the member is prejudiced at claim stage. So it's an area that we want to focus on a lot more. Another enhancement is that we broke down the lapses and the termination reasons into categories, and this is a more granular level of detail for us.
So on that, could you explain to us why you need that level of information, that you now really break it down to the granular level?
Yes, so we ask about lapses on different periods, and this can indicate different market conduct risks. And to date, we have made certain assumptions, and then we've discussed these assumptions with the insurers in our regular supervisory engagements. However, we now need to move to the next phase of benchmarking, and we need the information to be more accurate, so that we need to take as many assumptions away as far as possible so we can have more accurate data. The categories that we chose are the ones that we identified based on the engagements that we've been having with the insurers over the past 3 years, and we asked them to split the information down further into these categories. This also gives us a clearer picture, and it also gives the insurer a clearer picture of where its own vulnerabilities are and how dependent the book is on the actions of certain intermediaries. You also notice that one of the categories that we've introduced is relating to intermediaries moving books of business. Now, us as insurance and our FACE colleagues have noticed that this is a particular area of risk. It's been growing as a risk over a number of years, and we've seen abuse in this space where intermediaries are processing or moving books of business more to get higher commission or to get higher forms of remuneration. And there isn't that specific focus with respect to the interests of the policyholders. We would expect to see as a conduct regulator that books are moving because it's maybe better premiums for the policyholder, maybe better benefits for the policyholder, but that unfortunately has not been the case. Now, we were able to track these movements of insurers when they notify us if a binder termination is new or if it terminates, but you can imagine these are quite high volumes of notifications. So we've introduced this requirement in the return so that we can quickly and easily pick up these trends so that we can mitigate the risk not only to the policyholders, but also to insurers, especially in instances where we pick up, for example, bad books of business moving. And the same rationale is also applicable to cancellations.
Thanks, Vanessa. That's very comprehensive. My last question on this sheet has to do with replacements. So you're also focusing more on the replacement policies. Why is that necessary?
So, Charene, a few years ago, we introduced a requirement in the policyholder protection rules, we call it the PPRs, relating to insurers and replacements and requiring insurers to notify us in the event that they pick up any non-compliances or concerns with respect to policies that are replaced. And we introduced this requirement so that we can start tracking any potential non-compliances or what we call churning of policies. So whilst investigating these reports from the insurers, we picked up two trends. One is an issue relating to the quality of these replacement advice records, and the other relating to the oversight that the insurers exercise with respect to these policies that are being replaced. So the additional questions signal to the insurers what we expect of them in order for them to give the protection that we want the rule to afford to the policyholders.
Thank you for that comprehensive response, Vanessa. I'm going to move to another sheet, and that is the life and non-life micro sheet. And here to help us with understanding this sheet is Lehlogonolo. Can I ask the first question, which is, what is the focus of the business composition section under the sheet?
Thank you very much, Charene, for the question. So the business composition section focuses on determining the total number of policies in force, the total number of policies sold, the total number of policies not taken up, and the total number of policies terminated and lapsed within the reporting period. So you will note that this is a lighter version of the insurance CBRs, and this is the first conduct of business return that will be expected from the micro insurers. And as you can see, we also made an effort to keep proportionality in place, looking at the differences between a micro and a traditional insurer.
Picking up on that, so this is the first time we're asking the micros to respond to this. So what would be the benefit to them to respond to these questions?
In terms of the benefits for the micros, firstly, it would be an indicator in terms of determining the persistency in the policies written by the micro insurers. And this will also assist us in establishing whether the products are sold to the correct target market within the industry.
Thank you. Can you expand on the question relating to the total number of policies terminating, excluding by reason of cooling off?
Okay, so the reason why we are asking this specific question is to establish the reasons why policyholders would terminate their policies for any other reason outside of the reason of cooling off. And the reason why we do this is because we have identified conduct risks that might relate to mis-selling, and we're also able to identify whether policies sold will deliver as promised to the policyholders from a TCF point of view and FA outcomes perspective.
And the concept of TCF is really important, so it's nice that we're checking that. Great stuff. Can we take a look at the lapsed policies itself? So why do we need to ask so many questions about lapsed policies or questions at all?
Okay, so in terms of the lapsed policies, we have identified a risk in that regard because you would find that a policyholder might not be aware of a missed premium, especially in instances whereby you would find that the intermediary is responsible for collecting premiums, and then those premiums would not be paid by the policyholder directly. So as a result, this leads to policies lapsing without the policyholder being aware of the missed premium. And then in addition, policies might also be lapsed to the detriment of the policyholders as a result of intermediaries not having remitted the premiums to the insurer.
That's very useful. What is the focus of the product performance section?
Under the product performance section, we look at the number of new products that were launched in a particular period, as well as the total amount of the gross written premiums.
Could you elaborate on the reason for asking the questions on the new products that are launched by micros?
Okay, the reason why we are asking for this information is because the micros and traditional insurers who underwrite the funeral class of business are required to submit new product notifications to the authority for assessment within 31 days prior to the launch thereof. So we have identified risks whereby insurers would launch products without having submitted those to the authority for assessment, and this product would not necessarily adhere to the microinsurance products standards under the PPRs, which is the policyholder protection rules. So basically, the implication of this is that the product would have unfair terms and conditions, which would result in policyholders being prejudiced.
Thank you. If we look at the section on claims management, there's quite a few questions there. Could you explain why we need to have this information?
Okay, so under this specific sheet, the claims related questions would indicate the total number of claims received, claims settled and claims settled during a particular reporting period. So this information would also be an indicator in terms of whether funeral claims are paid within the 48-hour turnaround time, which is the stipulated legislated turnaround time in terms of funeral policies. So under this section, furthermore, we will be able to identify the number of claims that are settled outside of the 48-hour turnaround times as legislated in the PPRs.
Thanks, Lehlogonolo. We've talked about the reason for third-party agreements and why we ask so many questions about that on different sheets. But now here we have a sheet in the all sheets on complaints, but we also have specific questions on the additional sheets on complaints. Why is it necessary to ask the additional questions?
Charene, in a nutshell, the reason for asking this is to get more details around products that create most complaints within an entity, and also to understand whether all complaints are treated the same.
Thank you. And my last question on this sheet then is also still in relation to the complaints management, and that's about the risks. So what are the risks in terms of complaints management?
From a complaints management point of view, the one risk or one of the risks that we have identified would be an instance whereby complainants are not kept up to date regarding the status of their complaints, or in instances whereby outsourced parties do not deal with complaints in line with the insurers or the policyholders' expectation.
Thank you very much, Lehlogonolo. I want to move to the additional sheet for banking. So if we could take a look at that, and I'm going to ask Solani to join me. Thanks, Solani. So let's start off by asking how the sheets link up together. So how does this sheet on banks link up to the sheet on the conduct standards, or to your conduct standards that you have published? I'm sorry, I phrased that badly.
Yeah, thank you so much, Charene. So if you will remember, in July 2020, the FSCA published the regulatory instrument, which is the Conduct Standard 3 of 2020, where the banks were given a period of 12 months to allow them to implement and become fully effective in July 2021. So that conduct standard was issued to effect the mandate of the FSCA to have oversight on the conduct of banks as the Financial Sector Regulation Act 9 of 2017. So the main purpose of the standard is really just to ensure fair outcomes for customers by banks. So the purpose of these additional sheets is to understand how the bank's customer base is made up, how banks are conducting their business at product level. So the data that is requested on both sheets talk to some of the customer pain points that were identified in the retail diagnostic report, if you will recall. This further assists the FSCA to understand the current focus on financial inclusion and if the products that were developed are suitable and sold to the right target market.
Thanks, Xolani. It's nice to see how the questions link into the conduct standard that you've published. You've also mentioned the two sheets. So we have the bank's retail and the bank's business sheets. And the questions on them are pretty similar. So why couldn't we combine it into one sheet? Why do we need to have two sheets?
The reason for that is that these are different types of customers and they need to be treated as such to ensure that the supervisory approach is focused where the risks are. So you will see that on the retail side, it's more product specific, and on the business side, it is more revenue driven.
So picking up on the product issue, I see that there are questions on the all sheets on products and services already. So why do we need to hone in more on those questions on these additional sheets?
So like many of the other sectors, we ask for the information on product level. So the totals should match up with what was given on the all sheets, but it's broken down into more detail to track the size, value, and the performance of certain products.
In the banking environment, there's fast-paced changes, and part of that is moving away from the traditional bricks and mortars. So why, given that change in the banking environment, are we still interested in asking questions about the physical distribution channels?
Yeah, so that is based on our unique South African history, because most of our vulnerable customers are financially illiterate and not technologically savvy. So the interest of the FSCA here is to ensure that banks put customers first and that the manner in which the customer interacts and accesses the banking services is convenient for the customer. So this will further promote and enhance financial inclusion.
Oh, okay, that's a very sensible reason for asking those questions. We break down the target market on the sheets in a very granular fashion. What is the rationale for this?
The rationale is that we want to primarily test financial inclusion also in the gender space. So you will see that the questions go into the gender demographics and age and so on. So this information, we actually need this information for reporting on financial inclusion and financial literacy. We do, however, need to be sure that the current and future products are appropriate for the target market, and therefore the institutions need to know and understand their customers. So we need to be really convinced of that. We do believe that all banks have these indicators. Whether they have reports on it or whether they're using the data optimally, that is a different question. But that is why we cater for the phase-in period. It is worthy also to note that the OECD risk dashboard on conduct indicators was considered when looking at the identifiers banks should have and should be able to report on and use. They should use these regularly themselves.
We understand that you want to test and measure the type of interaction and accessibility of the banks. You've also mentioned the financial literacy. So accessibility, I think, is very important. Is this why you have questions about ATMs?
Absolutely, yes. So again, with guidance from international bodies such as the World Bank, we have come to realize that for the South African market and the closing of many branches, this is an indicator of accessibility for the target market of the bank. It might be more so for some banks than others, depending on their target market and other communication and distribution channels. So we really need this information to see the entire picture.
You have questions about cost. So the cost calculation, is that per transaction or per interaction?
So it's based on international best practices and guidance that we got from the CGAP team from the World Bank. If a bank is truly focused on customer outcomes and catering for all types of customers, they should know that what the average cost for using the various communication channels are. So this also plays a vital role when the banks develop new products or when they send out communication and expecting a response from their customers.
Thanks. And then the last aspect that I would like you to discuss is this product performance that we see in front of us. If I look at the questions, they seem to focus not only on the actions of the customers, but also on the actions of the banks.
Yes, that's absolutely correct. So as you know, there's a lot of focus on the termination of account and not just dormant accounts, and the risks of trends that were identified before the recent articles and focus in the media. We need to monitor the risks. This is also in line of section 9 and 10 of the conduct standards. So we need to see what type of products really add value to customers.
Thank you, Solani. That was very useful. If we can move to the next sheet, which has to do with cooperatives, I'm going to ask Lehlogonolo to join us again. And my first question, Lehlogonolo, is can you tell us why cooperatives are required to report on the number of customers based on age and specific salary bands?
Thank you very much for that question, Charene. Just as an opening remark, I just want to indicate that cooperatives are member-based institutions, and therefore the information is required by us in order to determine the level of access and inclusion in the sector. So this information will also assist us in determining the vulnerabilities that members of the co-ops might be exposed to.
Thank you. Why are the cooperatives required to report on the number of instructions that were finalized from customers in disputing transactions in the suspense and general ledger accounts during the reporting period?
So, Charene, the reason why we request this information is in order for us as the authority to be able to assess how cooperatives deal with risks emanating from fraud and unauthorized transactions. So additionally, this will be an indicator for us as to the extent to which our co-ops deal with these matters in order to ensure, once again, fair outcomes for the members.
Thank you. If we look at product performance, which is also a section on the sheet, there are questions on the reporting of the number and the value of dormant accounts with unclaimed positive balances. Why do we need this information?
So on our side, we require this information so that we can assess and establish the extent of the dormant accounts with unclaimed positive balances within the cooperative sector. So we also see that there is a potential risk that members may not be aware that the account must be kept active, while you have it. And we also need to understand the implications on the customers or the members in terms of the possible fees that might be charged on those products or accounts.
Thank you. That's sensible. We've also got questions on complaints management on these sheets. Why is that necessary?
That information on complaints handling, it's necessary because it will assist us from a supervision perspective in terms of identifying the level of complaints within the cooperative sector and the extent to which those complaints are resolved. And also, as with some other sectors, we do ask questions regarding complaints, which we believe can be linked to specific products or books of business on the additional sheet. So lastly, I just want to comment that this is a more in-depth look at the complaints than on an entity level on the all complaints sheet.
And then my last question, and I know we can have a lot of questions on this, but in the interest of time, there's one thing that I'd really like you to elaborate on, and that is the value of amounts held with a secondary or tertiary cooperative.
So the reason why we ask for this information is for us to determine whether the cooperative that we are supervising is holding any funds within a secondary or a tertiary cooperative. And this information is also valuable to us because it will assist us as the authority to monitor the potential risks within the secondary or the secondary cooperative. And those factors are the factors that could negatively impact on the cooperative that we are monitoring.
Thank you very much. I really appreciate this. I'm going to be moving to the pension fund sheets, and Neale is going to help us to understand the composition of the sheet. Thank you, Ryan. So the first thing that I'd like you to elaborate on is that why do funds have to submit the Omni CBR over and above the other statutory returns and submissions that they're already submitting?
Hi, thanks, Charene. Yes, the Omni CBR is designed to align with the treating customers fairly principle. So in other words, each question has been measured against the TCF outcomes for applicability. It's further envisaged that the Omni CBR will be submitted quarterly in order to provide more timeless and relevant information, as opposed to statutory returns, which are typically submitted up to a year after the effective date of the return. And the information being requested elaborates on the information already been submitted, and care was taken not to duplicate the information provided in the audited financial statements and valuation reports.
That's very sensible. It does give us faster information. Yeah. So if we look at some of the questions that you have on the sheets, I see that there are questions that differentiate between underwritten, private and own administered funds in the return. Why is it necessary to go to that level of differentiation?
Charene, each category of fund has its own unique set of risk areas that have been identified by the authority based on statutory returns and prior findings through on-site inspections, which have been conducted by the authority.
Useful. Why have you focused on certain aspects of the pension fund business and they get more emphasis in the questions than other sections?
Okay, the particular aspects of pension fund business that were identified are based on the risks that we've identified that are present in the industry and which also then relate to the favorable outcomes to members.
I see there are quite a lot of additional questions around governance on this sheet. Why is that necessary?
Okay, the controlling mind of every retirement fund vests in its board of management, and by requesting the governance information per the CBR, we can then proactively detect any instances where the board is not properly constituted, for example. And you'll note that the additional questions under the governance part on this sheet are also in addition to the other questions on the governance sheet for all institutions. And this is to measure the risk and compliance of the fund on a quarterly basis. So this would then assist us in potentially avoiding regulatory interventions such as, for example, Section 26 board appointments.
Thank you. Potentially contentious question. I see that you have that you request information about the salary bands of the members. Why is that important?
Okay, the information that we normally receive in the statutory returns provides us with a combined figure on membership, whereas the breakdown as requested provides more detailed information regarding the composition of membership and information regarding inclusion of the various sectors of the population. It also contributes to the risk rating we would award to a particular fund.
Thanks, Ryan. And then the last question on this sheet is, what is the reason that we want this information and what are we going to be doing with it?
Yeah, the overall purpose of the CBR is to provide the authority with information to enable the authority to act timeously and appropriately in relation to areas of concern that have been identified through the information provided.
Thank you very much, Ryan. Still sticking to pension fund environment, but honing in on the Section 13B administrators. I'm being joined by Andy. Thank you very much for that, Andy.
Thanks.
Really appreciate your time. So why is it necessary to make this differentiation and have a sheet just for Section 13B administrators?
Thanks, Charene. I think this is a very important sheet as it gives a good indication for the regulator of how the business of the administrator is constituted and how many funds an administrator is looking after. It indicates how many of those funds are either registered or unregistered and how many or how much of the assets that administrator is actually looking after. So it lists the various categories and types of funds and provides information about unclaimed benefits, how successful or unsuccessful the administrator has been in tracing, those members to whom the unclaimed benefits are due. And lastly, the sheet also gives us an opportunity to see the activities that keep the administrator busy. So this could be, from dealing with Section 14 transfers, processing all kinds of benefit payments, and whether this is done in line with agreed upon turnaround times, or if the administrator is struggling with the volumes.
Thank you. I see that the sheet refers to retail and non-retail. So what is this all about and what do I complete as a Section 13B administrator?
Sure. So retail is to be completed by those administrators that only administer commercial funds, right? Such as your retirement annuity funds, your preservation funds, while the non-retail part of the sheet is to be completed by those administrators that do not have commercial funds. And, they would be administering other types of funds, such as your occupational funds, your general standalone funds and umbrella funds.
But Andy, can't an administrator do both retail and non-retail?
Most definitely. And, it is possible that an administrator can be both retail and non-retail. In that case, both sections of the sheet must be completed in relation to those categories of funds.
Okay, thank you. Why is it important to understand if an administrator is also administering unregistered funds?
I can think of two crucial reasons, Charene, and one is, where those unregistered funds fall within the category of those funds that ought to be registered under the Pension Funds Act, because you do have some exceptions. Then it's really in the interest of that administrator to register those funds without any delays or to bring those funds to the attention of the authority. Because we don't want, that administrator to be in contravention of the Pension Funds Act, as that might actually have dire consequences for them, as regulatory action can be taken against the administrator.
That makes a lot of sense, but you said that there were two reasons?
Sure. So the other reason, Charene, is simply that, with a registered fund, that fund ensures certain protections for members under the Pension Funds Act. So the Act provides, amongst others, how such a fund must be run, what the fund must comply with in collecting contributions and investing them, and what its reporting requirements are to the authority and also to the members themselves. So it makes good sense to ensure that, the funds are registered where applicable.
Okay, that helps a lot. I'm sure that people understand better why they have to answer those questions now. But why is it important for us to understand how much assets or funds an administrator is looking after?
So those questions provide great insight, to the authority about the size of the administrator, what the impact would be on the retirement funds industry should that administrator fail. So it's important with such administrators to monitor if they are able to handle the volumes of work that's involved with handling such large funds, and the benefit payments that arise from those. So if an administrator is dealing with large volumes and is not coping because maybe it's not appropriately staffed, that will be indicated amongst others by missing turnaround times and having large benefit payments pending. So with such an administrator, that means members are actually experiencing poor service and poor outcomes.
And we've mentioned TCF a couple of times during the discussion, so it's important.
Yeah.
Thank you. I see there's quite a lot of questions on the spreadsheet around unclaimed benefits. Why are unclaimed benefits such a hot topic?
Well, the authority would like to get an indication of how many unclaimed benefits an administrator is looking after, and if the administrator is doing any tracings on those benefits, or if those benefits are merely sitting there and getting depleted by administration fees, costs, and other charges. So this would obviously lead to very poor outcomes for those members or members of retirement funds, because when they eventually come forward to claim their benefits, they will find them greatly reduced, or in some cases, the entire benefit depleted.
And that's not good outcomes. Thank you. Last question on this sheet is, you ask questions about the demographics of the staff. What is the reason for this question?
So Charene, with that question, you'll be aware that, the authority has, as part of its strategic objectives, transformation of the financial sector and inclusion in the financial sector, is of high importance. So this is not just transformation and inclusion at an ownership level, but it's also about who is participating within the industry. So is this industry inclusive enough? Is there diversity, or are we failing as a country in that regard? So with this information, we can in time be able to see who is at the helm of all these financial institutions and these administrators in particular, and if the institutions are inclusive enough. Thanks, Charene.
Andy, thank you very much for joining me and giving me so many very good responses. I'm sure it helps people to understand the reason for the questions better. We're going to be moving to the asset manager sheet now, and I'm joined by Xolani. If we start off and just ask for why is it necessary to ask additional questions above the questions that we ask on the business composition sheets?
Thank you, Charene. The aim of this additional section is to understand the asset managers' assets under management, the types of customers, the distribution channels that they have, terminated mandates, third-party administration, illiquid assets, pricing errors, as well as unallocated funds and deposits. And obviously, we need this information in the breakdown of types of asset managers to address and monitor some of the risks that are unique to this sector. It will also build and cross-reference some of the information on the all business composition sheet, the same as with other sectors.
You've mentioned assets under management. Why, as the authority, do we want to know how much assets under management is being managed by various managers?
The assets under management indicate the amount of customers' money that a particular asset manager manages. The asset under management depend on the flow of investors' money in and out of a particular fund. And as a result, it can fluctuate due to various reasons such as asset performance, changes in the market, termination of mandates, closure of mandates, capital appreciation, reinvested dividends, and decrease or increase in the investors' flow.
Why do you need to understand the types of customers that the asset manager is dealing with?
It is very important to understand the types of customers the asset manager is dealing with, simply because types of customers are indicative of whether the customer is knowledgeable and has expertise, as well as the resources to access the products or services that the asset manager has.
What is the value for the authority by asking questions about the distribution channels of the asset managers?
So Charene, on this one, different distribution channels of asset managers pose different risks, which require different controls and different measures. So distribution channels are also indicative of whether customer will have easy access to products or services offered by the asset managers.
Thank you. I see we also ask questions about outsourced administration. Why is that important?
Outsourced administration entails more monitoring control requirements on the third-party administrator. Outsourced arrangements may have financial implication on the customer. Where there are additional costs, these costs may be passed on to the customers. So the reasoning is very much in line with why some of the other sectors also have specific outsourcing or third-party agreements on their additional sheets.
We've also got some questions about pricing errors. Why do we want to know about pricing errors?
Charene, pricing errors may result in financial losses to customers, whereby the asset managers will have to take remedial action and put preventative measures in place to ensure that customers is put in the same position had the error not occurred.
Thank you. And then my last question on this sheet has to do with the unallocated funds. Why is it important to understand unallocated funds or deposits?
The amount of unallocated funds or deposit is indicative of the controls and processes in place to ensure that customers' monies are allocated to their accounts. The customers' monies must be immediately identified, traced, and allocated promptly. The information will also assist in assessing how the regulated entities treat unallocated clients' funds or deposits.
Thank you very much. Sticking to the world of asset managers, but honing in on the CIS and hedge fund managers, Brent is going to be joining us for that one. Thank you, Brent.
Hi, thanks a lot for the opportunity, Charene.
So Brent, we have quite a few questions to look at because we've got two sheets to actually discuss in the CIS and hedge fund environment. So if I can start with the first one is, why do we want to know about the separate CIS portfolios? Why do we have a separate annexure for that?
Right, thanks for the question, Charene. I think we should probably first understand that as the FSCA and as the regulator, we don't just approve the collective investment schemes manager, we also approve the individual portfolios and each and every one of them. And in doing so, we actually do require information on the administration of those portfolios, and the required information at the moment is also a regulatory requirement to actually submit on a quarterly basis. So from that point of view, we actually try to ensure that the regulations, the requirements, and the investment policies are complied with by each and every portfolio.
Thanks, Brent. So if we look at the questions that you're asking, why do we need this level of detail?
Charene, we should also note that one of the primary objectives of the Financial Sector Conduct Authority is also to enhance and support the efficiency and integrity of financial markets. And to effectively do that, we do require a level of detail in the information that we actually do receive from entities, and this would be one of those circumstances.
So following on from this, so there's a reason why we need this level of detail, but why do we need it quarterly? Isn't that a bit much?
Thanks, Charene. I don't think it's much, Charene. If we look at it at the moment, right now, it's a current requirement for quarterly submissions and disclosures. Some might think it is quite a lot. I might not agree with that, but our aim is to bring all of the information in-house eventually, and to have a holistic view of the sector and industry per portfolio, per sector, perhaps one day per strategy as well. And that's going to assist us with our ability in future to actually allow us to have predictive analysis when it comes to markets and the portfolios that actually interact with them.
Thanks, Brent. It's a lot of information, and it makes sense that we need regular updates on that. So just the last question on this sheet before we move on to the next sheet is, why do we need a separate portfolio sheet for each portfolio per quarter?
Charene, so each portfolio is, as I said earlier on, approved. And it's actually approved in its own right. Now, each portfolio is separate and segregated from any other portfolio that's managed by the exact same entity. We also then, as I said, need to ensure that the constituting document and the investment mandate or policy of each portfolio is actually complied with. And we do that at a portfolio level. And to do that, we do require detailed and regular information on each and every portfolio that we do approve, and that is supervised and administered.
There's a lot of different columns on the sheets. How did you decide on the breakdowns on the types of portfolios which are reflected in the columns?
Interesting questions, Charene. These are based on, firstly, what is currently in the Act. So the Act being the Collective Investment Schemes Control Act. So we have these specific types of collective investment schemes. All of them are noted in that detail, except perhaps for the retail and qualified investor hedge funds, where we've actually gone and separated them into the two various types of hedge funds, just so that we have a level of detail that is perhaps in line with the risks and the actual conduct that we are trying to monitor as well.
Thank you. So you have quite a few questions on repurchases. So firstly, why do you have the questions on repurchases? And secondly, what risks are you trying to monitor?
So Charene, we should probably also note that in the CIS space, you do have events sometimes where repurchases are suspended. Those can only be done with the approval of the regulator. So that's the first one. Secondly, we also need to understand that repurchases directly impact the experience of investors, the manner in which they are able to exit investments, CISs, and from that point of view, the repurchases and the information around them are actually very important for us to understand, because it directly impacts the experience investors have when they are actually operating and investing in various types of collective investment schemes and their portfolios.
Thank you very much. Why do you have additional governance questions?
On that one, Charene, we actually do approve the individual board members, and from that point of view, we do find that from time to time, you know, we get the information in quite slowly. Hopefully, this opportunity provides us with an opportunity to not only see whether or not there's a lot, and to actually track the trends with regards to the appointment of boards, governors, and senior staff, but to also see whether or not there's a buildup of risk. You could have a high number of people leaving an organization, and it allows us to actually track and to ask relevant questions to say, is there a problem that we need to be looking at? Are there conduct issues that we should be aware of? And it goes back to the fact that it allows us to actually deep dive on certain entities to see, is there something more that we need to be asking?
Thank you, Brent. You've been very patient with all of my questions. And the last question here is, there are questions around product performance. Why is that necessary?
I think product performance for any investor is quite important. And again, along with the repurchases, Charene, it's indicative of how investors actually experience certain portfolios, be it the performance fees that are being charged, be it performance in general. So I think from our point of view, we see performance and the performance of the various products that we individually approve as very important to treating customers fairly. We need to know how products are performing, what the trends are with those specific products, and where there is a build-up of any risk or a specific conduct that we are noting in our sector that perhaps we need to look at more closely.
Thank you, Brent. That was very informative. I'm moving to the non-life insurer questions now, and Marrelie is joining us. Hi, Marrelie.
Hi, Charene, how are you?
I'm good, thank you. Marrelie, let's kick off and ask, what is the difference between the non-life insurer benefit level sheet from the non-life insurer business composition sheet?
So there are 32 sheets included in the Omni CBR, which include the classes of business as set out in the Insurance Act, and the benefits must be reported on the sheets for the class on which the benefit is being written. The non-life personal and commercial benefit level sheets are divided into 4 sections, which are business composition, claims management, excess structures, and complaints handling. And the information required in the business composition and complaints handling sections of the benefit level sheets assist us in understanding the true size of the book, the behavior of the policyholders on specific cover types, and to determine the real growth for each of the cover types.
Thank you. What changed under the claims section and what was the reason for the change?
The questions related to claims ask for information on a product level, and the questions relate to claims accepted, claims paid, repudiations and the reasons for the repudiations, as well as reasons for claims withdrawn. Turnaround times are asked for claims outstanding and claims finalized. As you would know, in the policyholder protection rules, the FSCA indicated that claims should be finalized within a reasonable time. And in order for us to do benchmarking, this is information that we require so that we can establish what is a reasonable time to finalize different types of claims and to identify outliers when we do peer-to-peer comparisons. For this reason, we included different ranges relating to turnaround time as well. And these questions do not only indicate compliance, but is also a strong indicator of culture of an institution.
That's a very, very interesting indicator that you have there. You've got a new section on excess structures. So what was the thinking behind this and why was it added?
Charene, we noted that policyholders are definitely being prejudiced by certain practices in the industry related to excesses. Examples of these practices that may result in unfair outcomes to policyholders are high excesses, multi-layered excess structures, or percentage of insured value excesses that may be unaffordable to policyholders at claim stage. So in many instances, policyholders essentially became self-insured without them really realizing it. So the excess-related questions on the sheet include details of whether the insurer utilizes a multi-layer excess structure or not, confirmation of the maximum basic excess amount in rand value that the insurer allows, confirmation of the number of claims received during the reporting period on which the excess was determined as a percentage of the loss or value of the insured risk, and if that's applicable, the number of claims received on which total excess was more than 20% of the loss or the insured risk value, if applicable, and an indicator of the average excess applicable across all policies that were enforced at the end of the reporting period.
Thank you very much, Marrelie. That was very useful. I'm going to be moving to the life insurer risk benefit sheet, and Louisa is joining us. Hi, Louisa.
Hi, Charene.
Louisa, please explain how the individual benefit sheets have been enhanced for the life insurers who underwrite group business, and what are some of the changes and what prompted us to consider these changes?
Thank you, Charene. So some of the significant amendments for reporting on group policies for the life business is the expansion, for example, on the claim section, where, for example, we don't only ask you, how many claims have you settled for the quarter, but we drill down and we ask you, of the claims that you've settled, how many were, settled in full versus the ones that were partially settled. Now, moving over to the questions that we ask around repudiations, we ask you to break down the repudiations that you are reporting to us. We provide, for example, where we ask you the repudiations because the policyholder was still within the waiting period, for example, or where insurers are repudiating for reasons such as pre-existing health conditions, because those are some of the things that we track, and those are some of the reasons that we see that they tend to generate complaints from policyholders. Now, looking at questions around lapses and terminations, the same rationale is applied where that is followed for lapses and for terminations. So we need this detailed information so that we can identify, trends in the industry, as well as to identify outliers. To date, we can mention that we have been engaging insurers and we have been looking at similar data, and we've been using such information to identify the outliers and to monitor trends. Okay, so the categories that we use in the CBR were identified from the engagements that I just mentioned now, where, depending on the risk rating of the insurer, we've been engaging different insurers at different frequencies, some quarterly, some annual, some biannual. And in addition to that, we've been attending various claims meetings that are held by the insurers just to gain insight in terms of the kinds of conversations that insurers are having. Now, back to the return itself, we also ask questions around the age analysis of claims, as can be expected. We drill down and we ask how many of your claims are outstanding. Of those that are outstanding, how many are you still investigating, as well as obviously how many have you finalized during the reporting period. Now, obviously, a question that can be asked is, what is the aim of all this monitoring? Why are we asking all these questions? It is really just to, to check on whether the correct culture is embedded within insurers. For example, around providing feedback to policyholders when they claim. Are you providing, periodic feedback, as can be expected by policyholders, to avoid, possible complaints, to say you're not giving me, an update on what's happening with my claim. And yeah, we also want to assess whether there's effective claims management systems in place. What I can share, Charene, is that what we've seen over time is, for some insurers, unfortunately, they've been lagging behind, in monitoring their claims. And this happened even before COVID days. I know that COVID has impacted a number of businesses, but for some insurers, we've been seeing this sort of trend even before, COVID hit. And the inefficiencies that we see, it could be, incorrect processes, or it could be, where there's just not enough levels of staffing within the departments. So in a nutshell, Charene, those are some of the enhancements.
Louisa, thank you. You explained this very succinctly, and there's quite a lot of enhancements, but we understand the reason for that. Thank you very much. And we're now on the last benefit sheet for this presentation, and this is the one that deals with life insurers' investment benefits. Juanita, please explain to me, why did this sheet change quite as much as it has changed?
So, Charene, when we brought out the insurance CBRs, one of the things that was really a big pushback from industry and that we got a lot of comments on was that the benefit sheets didn't really cater for investment type of policies underwritten by insurers. The traditional insurers then ended up reporting anyway about their investment policies under the normal questions that we had for claims, and they accepted that claims means payments, and they reported in that way. But then we excluded the linked insurers. And I think with the Omni CBR, it's important to know that no insurers are excluded anymore. We have the linked insurers, we have the group business, and we have the commercial business that's included. And to cater for that and take into consideration also a lot of the feedback that we got from engagements with insurers in the last 3 years about why does it not really cater for you, and what do we need to change to make it applicable for your business, to make it easy for you to report on, and what indicators do you use. We took all of that information, and that is when we changed the benefit sheet to talk about payments. And also to talk about the instructions that you're getting on the withdrawals, and how quickly you're actually attending to that. So the questions are much more specific now for an investment type of policy that's underwritten by an insurer.
Thanks, Juanita. You've also mentioned linked insurers. They now also included?
Yes, they are. So previously, we only asked about products and product lines that we knew there was a big market in or where there was a concern in. And we've always said that even the insurance CBR is a living document, the same as what the Omni CBR is going to be. So in the Omni CBR, we actually divided the subcategories of the main classes of business to line completely to the Insurance Act. And therefore, linked insurance business is totally on its own. So the linked insurers will only generate those sheets that are applicable to them, and they will then be able to answer these questions because it is actually indicators that they should have. We realize that the few linked insurers, that pure linked insurers that we have in the industry, do feel that almost the business that they're doing is not really insurance business, it's more investment business, but they are licensed insurers. And what we're asking here is what we expect them to have from a market conduct perspective. So they will now be able to answer this version of the Omni CBR, and then we can start working on going into more detail in that respect.
Thank you very much, Juanita. And if you could just stay on to help me do the sanity check on the last processes. So we've now gone very comprehensively through the whole of the Omni CBR between the last two of the 3 webinars. So just to recap, the first webinar is all about why we have the Omni CBR, where it came from, and the timelines and the roadmap looking forward. The second webinar, we looked at the sheets that apply to every single entity, regardless of the kind of license that they have with us.
Yes.
And then in this webinar, we looked at all of the additional sheets and we unpacked some of the key questions. Obviously, with time constraints, we couldn't look at every single question, but we tried to highlight those questions that we think you might wonder about, and try and give you some upfront thinking of why we've included that. So to you and to all of the colleagues who've participated in the 3 webinars, I really thank you for your time and your attention. But now if we look at the industry participation going forward, we're going to be publishing the webinars on our website. So hopefully that's where you will access this, on the FSCA's YouTube channel. We're also going to be publishing the draft Omni CBR.
Yes. Yes, the draft Omni CBR, together with the roadmap, together with a document giving some explanation that we also covered in the webinars, and the information to how to get to the link, the portal on our website for the actual written comments will be included in the document, as well as indication of the workshops for the first round of consultation that will happen. Again, like you said, where we invite people from the industry to come to us, come with questions, come with presentation, come with alternatives on indicators. You now know what we're going to ask. You'll be able to view the entire Omni CBR when we publish this. You'll be able to look at the documents and the webinars and see what is our thinking behind it, what is the risks that we want to start tracking, how this can be valuable to your business, and if there's suggestions on something else that we could be tracking, should be tracking, could track something else and get the same outcome. We want industry in these workshops to come to us with those suggestions so that we can have those type of robust discussions.
And Juanita, what you have said, which is absolutely key, is that we really want industry to participate. And to ensure that the participation of industry is focused, we're going to have different workshops aimed at different sectors of the industry.
Yes, and even in the phase space, we're going to break it up into 2 workshops, where we're going to have the larger entities in the one workshop and the smaller entities in another workshop. And for all the sectors, if there are entities that do not feel they want to participate in the workshops, they can still attend it and just observe. They can give us the written comments through their industry bodies or on an individual level, or they can even request to have a meeting with us if we need to explain anything to them on an individual level, whether they want to discuss some other options with us on a more individual level. We really want this to be a robust consultation process, but also to include all entities of all the sectors, big and small, and give everyone an opportunity to really understand what it is that we're asking and to give us their views on that.
Thank you, Juanita. And I think what is important is that with the advent of virtual platforms, we are really excited because we can host such a large number of participants in our workshops. We have the ability to host 20,000 people, and that's 20,000 people. I feel as if I've won a lottery by saying that we can have so many participants in one workshop. And of the 20,000 participants per workshop, 1,000 people can actively participate by asking questions, by making comments. And then the 19,000 for the rest of the 20,000 participants can participate by watching the live workshop. And then if they have questions, they can use the other avenues that you've mentioned to pose questions afterwards, because we know that there are some people who are shy, who might not want to speak up during a workshop, but they still want to participate.
Yes, definitely. And we also have a dedicated inbox for any of the queries on the Omni CBR, or if you want to just there let us know that you would like us to set up a meeting. Obviously, resources are constrained everywhere, but we really want to try and meet everyone that has something to contribute to this process. Because the one thing that we want to make sure everyone understands through all of these webinars is that we see ourselves as partners. We are the authority, we do regulate, but we need this information to be sure that we can protect customers, protect entities, protect the industry as a whole. And as partners, we need to understand each other's business, our objectives, and help each other to reach that.
Juanita, you're completely correct. This is a partnership. It's not an adversarial relationship. It's not us and them. It's all of us together. And we need to try and make this as practical as possible for everyone who's going to be participating in the Omni CBR process, both now and in the future, because we have quite a lengthy roadmap. Just to remind people, we are now in the process where we are introducing you to the concept of the Omni CBR, showing you what we're asking and giving you an idea of why we're asking this. As Juanita has said, we want to make this practical. So your suggestions to improve this are going to be very welcome by us. It's not one of those processes where we're asking for your input and then ignoring it. We've created avenues and channels where we will definitely give attention to your feedback. We are going to be doing our level best to try and balance, because we do expect that some people will like something, and on the same question we might get quite a lot of responses where people don't like it, and then we have to try and find a balancing act between the likes and the dislikes. But we will also explain why we take a certain route in our feedback on the comments. So once people have participated in the workshops, they've participated in the avenues of giving comments on the various questions, there will then be a process where we collate all of the responses, and then we will be publishing those responses, and that's towards the end of this year.
Yes, we're hoping to have the amended Omni CBR based on the consultation and the comments we received ready by December. It also depends on how much consultation we need to do, maybe additional consultation to also understand some of the comments we're receiving. I think it's important to note that we've never ignored any comments that came back, even though people might feel that way. We've always considered everything, even in the first round of consultations on the insurance CBR, and it will be no different here. And there's no different weightings to the size of an entity and how important their comments are to us. And I'm sure there will be some indicators in this Omni CBR that people won't like. But what you need to understand is, why are we asking it? We also have a mandate, and we have to fulfill our mandate. And the question is not really whether you like it or not like it, it's whether you can see the value in it for us as the authority, but also for you as the entity. And this is a great way to see what are the market conduct indicators that you should be tracking to also protect your own business and your customers.
Juanita, thank you very much for that. And I think let's close off by just saying to people, the information and the value of this report is not just for us as the regulator, but it is a very useful business tool for every single business that has a license with us.
That is very true. Thank you, Charene.
Thank you very much, everyone, and we hope to see you in our workshops.